What is going on, YouTube Nation? This is Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I did my last clinical rotation today, which is good. Now I can start focusing on more videos, but I still have like a ton of homework and projects. So August 4th can't come soon enough. But I'm going to reveal to you my dividend stock buys. Now, like I said in my past, and I have in my disclaimer, some stocks I buy, some stocks I sell. No, I'm not a pumper. I'm very transparent with my dividend stock buys, and I provide my rationales as to why I buy dividend stocks. Like, for example, AT&T, they cut their dividend. Peace, you're gone. I mean, they have a terrible business plan. It's just everything sucks about them. I mean, I gave them a chance. We all did. And I got rid of them. I got rid of Verizon. Same thing. I just didn't feel confident with them. But these dividend stocks that I bought today, I want to review 3 of them with you, and I really like these ones. I'm going to be a little bit more in-depth with these guys. So I'm going to do a stock analysis, dividend stock analysis, and I'm going to just give you a prelude to phase 2 for my dividend portfolio. I went big today. I went really big. I made a decision for my dividend portfolio. I'm going to probably reveal it to you next month, so you have to hit that notification bell. It was a big investment I made. It's a big decision I made, and it has to do with turbocharging my dividend portfolio. I'm almost at phase 2 for my dividend portfolio, and I'm going to explain to you next month what phase 2 is and the end game scenario, what I plan on doing. But these ones are starting to turbocharge my dividend portfolio, and I really like these guys, and I'm going to just go over all my buys just briefly. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check these dividend stock buys out and dividend stocks out right now. The first dividend stock I bought, and they're really down right now, is Third Bank Corp, FITB. And like I told you before, I'm going after the financial sector and real estate sector. These guys are not doing well against the S&P. Price per share, they're not doing too hot against the S&P right now, and they have not recovered very well since the pandemic. So this is one I'm really capitalizing on. So their dividend yield is 4.61%, a PE ratio of 8.17, average volume 5.79 million. The market cap is 19.51 billion US dollars. Year range is 2211 to 3806. Day range is 2835 to 2888. Previous close is 2823. So I'm going to go over these guys real quick and choking on Starbucks coffee. By the way, I did buy Starbucks, and I'm going to go over them. But I'm going to explain to you my rationales as to why I like these guys. I'm going to show you just some technical stuff as well, which is very attractive to me. So let's go over this. The first thing I want to go over is their revenue trends. So this is annually in millions US dollars. I like this. First of all, an increase in revenue, which is very attractive. 2016, 6,889. 2017, 7,713. 2018, 7,973. 2019, 9,790. 2020, 8,402. 2021, 8,329. 2022, 9,353. So that's one thing that's very attractive with these guys. I'm going to go over a few more things. And that is the earnings per share of these guys. So there's right here, you can see at one point, you can blame the pandemic, things go down. But their earnings per share is pretty attractive, and it is slowly trending up. Also, data reveals, so there's an increase year over year. So Third Bank Corp earnings per share for the quarter ending in June 30th, 2023, was 82 cents and 7.89% increase of year over year. So I'm seeing increases right here. Also, Third Bank Corp earnings per share for the 12 months ending in June 30th, 2023 was $3.51, a 6.36 increase on year over year. So, and a nice thing about macro trends, they explain earnings per share. So good earnings per share increase my confidence in buying dividend stocks. So earnings per share can be defined as a company's net earnings or losses attributable to common shareholders per diluted share base, which includes all convertible securities and debt, options, and warrants. So I just wanted to let you guys know there is an increase in earnings per share. I wanted to be a little bit more technical with you guys as to why I like these guys. And I'm going to be a little bit more technical in the future once I'm done with school, because this is a little bit more serious when it comes to my investments, and this is why I'm doing this. So we're going to jump to their dividend history. So I'm going to start with their quarterly dividend trends. This is a track. 2011, it was 6 cents to 8 cents to 10 cents in 2012. 2013, it was 11 cents to 12 cents. 2014, it was 13 cents. And it was a little stagnant. And then 2017, it jumped up to 14 cents to 16 cents to 18 cents. 2019, it jumped to 22 cents to 24 cents. 2020, 27 cents. 2021, 30 cents. And it just cracked 33 cents in 2022 and 2023. They have a low payout ratio. This is what I like. Okay, low payout ratio is another thing that brings my confidence into buying dividend stocks. Now, I am a little bit more aggressive. Some of these stocks that I have a little bit of a higher payout ratio. Okay, so right here, the number of dividend increases in the last 5 years is 5. The dividend growth in 5 years is 10.89%. That's beautiful. And the earnings per share show that it's attractive and it's good with dividend growth. So that's going to increase my confidence in buying them. And that usually increases the confidence of the board of directors to hike the dividend. Look at this high yield, 4.68% with a $1.32 if you bought one share. So that's very attractive for me. This is why I'm continuing to buy them. Let's jump to the next dividend stock. And again, I always say take it to the bank, because Bank OZK is tearing it up right now. And I really like these guys. I've been buying these guys with a dip. They're not really recovering for as fast as a lot of other bank stocks. So this one's very attractive for me as a dividend investor. It's sitting at 43.04. Dividend yield is 3.35%. A PE ratio of 8.11. The average volume is 1.53 million. The market cap is 5.54 billion US dollars. Its year range is 30.72 to 49.52. Its day range is 41.92 to 43.13. And its previous close was 41.71. So right there, you're seeing a decrease in price per share over time. You can blame the pandemic. Look at these guys when they took a hit. Look at that. March 27, 2020, 60.71% it went down. So it was 16, what was it? Let's just say $15.55 or 15.55. And now it's back at 43.04. So this is why I'm capitalizing on the financial sector stocks, because they're not doing too well against the S&P. But I'm going to show you a few more things that increase my confidence with these guys. And first off, it's their huge increase in revenue over time. So this is annually in millions US dollars. 2016, 764. 2017, 1,056. 2018, 1,208. 2019, 1,270. 2020, 1,185. 2021, 1,186. And then 2022, 1,380. So there's a huge increase in revenue. Love it. Absolutely love it. I'm going to go over one more thing before I go over the dividend history. And check this out. Earnings per share, you are seeing a huge increase, an exponential increase. Look at this. One point it was 152. Now it's 530. So earnings per share is way up. Now look at this. Right here. Bank OZK EPS for the 12 months ending in June 30th, 2023 was $5.30, $5.30, a 23.54% increase year over year. Beautiful. Next. The quarter, Bank OZK earnings per share for the quarter ending in June 30th, 2023 was 147, a 33.64% increase year over year. So that is going up. This is beautiful. This is why I'm buying them. And I'm going to go over their dividend history, which is even more beautiful. And I love it. Look at this dividend growth. This is 2018. This is quarterly. That's a quarterly dividend. 2018, 20 cents to 21 cents. 2019, 22 cents, 23 cents. 24 cents, 2019, 25 cents, 2020, 26 cents, then to 27 cents in 2020, and then at the end of 2020, it was 28 cents. Then at the start of 2021, it was 29 cents. So even during the pandemic, it's hiking, its dividend. Then 2022, 30 cents to 31 cents, 32 cents, 33 cents. Then look at this, 34, 35, and 36 cents. Dividend growth in 5 years, 11.03. Ho! I like that. Look at that low payout ratio, 26% right now per Zacks. Number of dividend increases in the last 5 years is 20. You bought one share, you made 144 with a 3.45% dividend yield. This is why I'm buying this. I like the numbers. Not doing too hot against the S&P. I absolutely love it. Now I'm going to jump to the next dividend stock before I just reveal my total buys. And I'm still capitalizing on Starbucks. I bought some shares today. They're sitting at 102.78, a dividend yield of 2.06%. A PE ratio of 33.32. The average volume is 7.20 million. Market cap is 117.83 billion US dollars. Tier range was $80 to 115.48. So I'm capitalizing on these guys right now. They are not at the point where they were at a look at this. And July 23rd, 2021, they were 125. These guys are 102.78 right now. So this is something that I'm capitalizing on right now. Previous close was 102.82. So right here, these guys have beaten the S&P, which is attractive. This appears to be like a Roth IRA stock or a traditional IRA stock. One, it's beating the S&P. Two, it's increasing price per share. Three, it has a stock split history, which is also attractive, which I have posted in previous videos. But the other thing is their revenue trends and their dividend history, which I'll go over. I'm going to be a little bit more in depth with these guys too. So let's go check this out. And these guys have exponentially jumped up like crazy. This is one thing that attracts me with these guys. Check out their revenue trends. Let's start in 2016. It was 21,000. 2017, 22,000, again, annually in millions of US dollars. 2018, 24,000. 2019, 26,000. 2020, a little bit of a dip. 23,000. 2021, 29,000. 2022, 32,000. So there's a huge increase in revenue. I'm going to go over two more things. The earnings per share trends are in an upswing. Okay. So this is just in the past 5 years. I'm going to jump to 5 years. So this is jumping up, a little bit down, and it's slowly trending up. But here's the thing. Their earnings per share quarter ending in March 31st, 2023 was 79 cents, a 36.21% increase of year over year. Earnings per share in 12 months ending in March 31st, 2023 was $3.09, a 16.94% decline year over year. I'm not too concerned. And I just wanted to point that out as a variable because Starbucks is always busy. They have done well against the S&P. Revenue-wise, they are jumping up like crazy. They are such in demand, even though people can brew their own coffee, which I'm drinking Starbucks coffee right now. They could easily brew their own coffee if they wanted to, but people don't want to do that. They just go get it at work. You want the Choca Mocha Chaboca or whatever you want it with, or chai tea and stuff. So they'll spend a buttload of money on a cup of coffee when you can just brew your own or use Starbucks beans and use an espresso machine like I do. It actually saves money over time. I actually calculated that. So let's jump to their dividend history. So I'm going to just start 2011. Here's their quarterly dividend history. 13 cents to 17 cents, 2012. 2012, then it was 21 cents. 2013, it started at 26 cents. 2014, it jumped to 32 cents, and you see a little stock split over there. 2015, it was 16 cents to 20 cents. 25 cents. 2017, it jumped to 30 cents. 2018, it jumped to 36 cents. 2019, it jumped to 41 cents. 2020, it jumped to 45 cents. 2021, it jumped to 49 cents. Then it just cracked 53 cents. Their payout ratio is a little bit high at 68%. Am I concerned? No. Number of dividend increases in the last 5 years is 5. Dividend growth in 5 years is 9.68%. So If you bought one share, you made 212 with a 2.06% dividend yield. Yeah, I'm not too worried about these guys. These guys are a big company. They've done too well. They've generated so much revenue, and worldwide they are well known. So I'm going to jump to my dividend portfolio and go over my total amount of purchase and shares. So I threw in $500. I've already done enough videos on Kroger. I have 1.12 shares I bought. Firtst Investment Corp, I invested 2.33 shares. Target, I have almost a little bit more than half a share. Bank OZK, I got 2.39 shares. I'm on a date with Wendy again, I got 3 shares. Got Starbucks, almost half a share. Fifth Third Bank Corp, I got 2.98 shares. Premier Financial Corp, I have 1.54 shares. I'm going to go over these guys real quick before I conclude everything. Because these guys, this one's a risk. The Premier Financial Corp is one of the smaller financial sector stocks. I mean, got to be careful with this one. I'm taking a risk. They're sitting at 1910, a dividend yield of 6.49%, a PE ratio of 7.25. Average volume is 189.09K. The market cap is 682.41 million US dollars. The tier range is 1360 to 3080. Day range was 1849 to 1924, and its previous close was 1847. So I'm going to go over these guys real quick. The Premier Financial is a community banking and financial services corporation headquartered in Defiance, Ohio. The holding company for Premier Bank, headquartered in Youngstown, Ohio, operates 75 branches and 9 loan offices in Ohio, Michigan, Indiana, Pennsylvania, and also serves clients through a term of wealth professionals dedicated to each community banking branch. Now, revenue-wise, they've done pretty well. This is pretty crazy. So this is annually in millions US dollars. 121, 2017, 148, 2018, 163, 2019, 186, 2020, 317, 2021, 322, and then 2022, 339. There is an increase in revenue, which is very attractive. Let's go over a few more things. I just am going over their earnings per share trends from 2017 to, let's say, April 2023. So at one point, probably this is the pandemic. So there's a few things I want to go over. Just earnings per share from 2017 to 2023. It was up. So year over year quarterly growth, it was up, and then it was a little bit down 2023. Also, earnings per share is a little stagnant. It was way up right here. I think this is the 2017, 2018, 2019, 2020, 2021. Then 2022, and right over here in 2023, it's 263, so it's trending down a little bit. So I just want to make you aware of that. And just to confirm it, I'll just do 2021 real quick. So, oops, I hit 2009. Let's do the past 2 years right here. It's been trending down. I'm pretty sure reading these graphs, that's what it's saying. I wish it actually showed me months, but you can correct me if I'm wrong. But that's what I'm seeing real quick. And I'm going to go over its dividend history. Now, here's the thing I want to go over with you guys. Okay, just because the dividend growth is high, got to be careful. You got to do a little bit more in depth, and earnings per share is a good indicator as well. So 2020 dividend growth was, let's just start quarterly, 22 cents, 2021, 24 cents, and then 2021, 26 cents, then 2027 cents, then 2021, 28 cents, and then 2022, 30 cents, 2023, 31 cents. So the payout ratio is not too bad. It's 45%. Number of dividend increases in the last 5 years is 9. Dividend growth in 5 years is 14.68%. So if you bought one share, you made 124 with a 6.71% dividend yield. So I just wanted to point that out. Always do your due diligence when buying dividend stocks. And again, I always state that some stocks I'll buy, I may sell, and it's not because I'm not a person that's a pumper or anything like that. I have integrity. I provide my rationales as to why I'm buying that. I'm not Mr. Zach Morris, who's in hot water right now. But the thing is, you have to really do some digging. Now, I've made some investments that blew up in my face, like I said, with Target and other ones. So just be aware of your investments and make sure you do your due diligence. And I'm going to jump to my disclaimer. I'm going to have a video for you guys tomorrow. Take care. So as a reminder, this YouTube channel that I have is for entertainment purposes only. Seek professional advice from a financial advisor. I am not a financial advisor. I'm not going to tell you what to buy. I am not allowed to tell you what to buy. If you ask me what stocks to buy, I'm not going to tell you because I don't give financial advice. You'll probably see me in the comment section say, I don't give financial advice. Some stocks in this video may be bought or sold. Some stocks that I've owned in the past, I have sold as well. So if I don't like them or, I get rid of them. So I'll just be honest with you and straightforward. This is my dividend investing journey. I show you my dividend investing journey. So you also may lose money with some of your purchases that you make with stocks. You're taking a risk buying stocks. I can tell you I've taken risks. I've lost some money on some stocks in REITs, like the Rich Uncle's Bricks REIT. And that was not fun, but guess what? I had enough resources to, I didn't have all my eggs in one basket. Again, I want to be straightforward with you guys. I'm just showing you my dividend investing journey. This is what my channel's about. I love doing stock analysis and dividend stock analysis videos. I really enjoy interacting with you guys on my YouTube channel. We have a lot of subscribers. I'm going to try to keep up with all your requests for dividend stocks. But again, I'm not a financial advisor, so don't look at me like I'm your savior or anything. I enjoy really the dividend investing journey, and I provide my rationales as to why I buy these dividend stocks in these videos. So if you do like a certain stock, I will do a stock analysis and dividend stock analysis. But remember, this is not financial advice. You guys take care and have a good one. And one more thing. I love making passive income. I hope you do too. Take care.